All right, so we're going to talk about these government-wide statements, which we've talked about them before, so hopefully you remember back on page 29 when we looked at the government-wide statement of position, and page 31 where we looked at the government-wide statement of activities. These are what we're preparing. So now we've taken the governmental funds and used a worksheet to help us convert those to accrual basis. We've added in the internal service funds, and we've got the governmental activities balances now. And the business type activities, those are the enterprise funds. They just come here, right, to the business activities. And now we're going to prepare those. So you got your separate columns for government and business, right? And if there's a discrete component, right, I suppose it's possible that maybe a city might run some discrete component like a school district that has its own separate kind of taxing entities and things. So that's discretely presented, and in this case they do have a component unit, so that example shows you it would just be completely separate from the rest of the government. That's what's called discrete presentation. And the government activities includes the internal service funds. And as you'll notice, the fiduciary accounts nowhere on here. To create the government-wide statement of activities, right? So that's this guy, right? You start with the expenses, right? So we go across. You recall that by governmental activity and by business activity, you start with the expenses. Then you take out the revenues, and then that shows you the net cost, because that's what people want to know. How much did it cost to run the police department? How much did it cost to run the water department, right? So it's a kind of odd form of income statement that, by general government, judicial administration, public safety. First we list the expenses, then we're listing the what we got to pay for it, and then we're listing out our net cost. So the change ends up being the net position, right? So these net positions is what's moved over to the net position, right? So you start, so the reconciliation of governmental fund balances to government-wide net position, right, starts with the fund balance, summarizes all the changes, and you make notes of your reconciliation items. Activity statement reconciliation reconciles the changes in fund balances to changes in net position to show the difference in accruals versus modified. All right, so there you go. That's your example there. So things that you have to change are depreciation, gains loss versus proceeds, deferred revenues need to become revenues. All those little things we had to change, you show how that changed. Capital assets, you have to keep track of them. So you need some books that keep track of those. Obviously, you keep the cost, location, the estimated life. Historically, you use a general fixed asset account, and it's just a listing of the balances of the assets, so that you know how to do that. Capital assets like plant, infrastructure, and equipment, you record it as an asset and you depreciate it. Land, you record it as an asset. You never depreciate land, not even in government. Collections must be held, and you must keep track of them. things you've collected up front. Infrastructure, things like roads, bridges, capitalized, and once you put them down as an asset, you can depreciate it just like you would any asset, but for infrastructure, like roads, like a dam, infrastructure, you can use a modified approach, which is basically the accountant sits down and decides how much impairment to take, right? So in other words, they sit down and they'll say, well, 80% of our roads are in great shape, and so they're worth this much, and 20% of our roads are in fair shape, and so they're worth this much. So it's kind of like, instead of taking depreciation, you're just estimating the book value. That's how I would describe that. So to qualify for the modified approach, you must maintain an inventory of infrastructure, right? So what I'm talking about, instead of taking depreciation, you have to say, okay, here's all our roads, here's all our streetlights, here's all our sewer lines, right? All that infrastructure stuff. And so you have it all written down, you know what you got. And every 3 years you do a condition assessment. These are in great shape, these are in fair shape, these are in poor shape, right? And you estimate how much to maintain and you document that. And you take the cost of maintaining it rather than taking depreciation. And long-term debt needs to get out there on those statements. The most common type are bonds, long-term leases, compensated absence, claims and judgments, and landfill closures. Similar to capital assets, you record them, and you record any changes just kind of like what you're used to. You would have a set of books called long-term debt account group, and it's just a balance of your liabilities, and you adjust them as you go. You may have to show a schedule of changes to this debt service, computation of the legal debt margin, so how much can we actually issue, and schedule of direct and overlapping debt. So these would all compile a full statement of government, a full set of government-wide statements. I'm more interested in you knowing what's on them, and maybe some of the ways you might have to debit and credit some of the accounts, but I'm not super concerned with completing that worksheet, just like what accounts go on what financial statement. All right, good luck with that homework and quiz.